Hello, good morning and welcome to this edition of the newspaper show right here on ET Now. I'm Cheryl D'Souza along with Varun Hirimat. And before we get on to the top stories that's there in the Economic Times as well as the Times of India, let me take you through a small caveat printed on the Economic Times right here on the top, why newspapers are safe. I'm sure most of us have gotten those WhatsApp forwards or the rumors saying that the newspapers are not safe. But let me tell all of our viewers and let me advise them that the newspapers are indeed safe. There's no harm in holding a newspaper, in reading a newspaper, as the presses in the Economic Times as well as the Times of India follow the safety protocols, including the delivery agents. They all follow the safety measures laid down by the health officials as well. So there's no harm in getting your copy of the Economic Times or the Times of India. So if you're not getting your copy, you can reach out to your vendors, or you can log on to www.wantmypaper.com and get your copy of the Economic Times as well as the Times of India right away. But till then, I'm here as well as Varun is here to take you through the top headlines that's printed on the newspapers this morning, and the top story across Times of India as well as Economic Times, both the papers. Let me show you here. It is about the Prime Minister's, Chief Minister's meeting that happened yesterday. It was the 5th video conference meeting, and the top story is that Prime Minister Narendra Modi has battled for unlocking of economy, but the chief ministers are divided. More on that story in a short while, but let me take you through what are the other top headlines as there on the Economic Times. Many chief ministers favor the extension and have also sought for the financial help. You have railway tickets worth 10 crore rupees that were sold to 54,000 rail passengers. The berths on some routes like Howrah to New Delhi were filled up in minutes. Moving on, P. Chidambaram, who is the former finance minister, is saying that we must resume air services, road services as well on back of the partial resumption of the railway services. And India Inc. is getting back to office, but very cautiously. E-commerce, tech and consumer measures are among companies that are restarting their workplaces. So these are the top 5 headlines as they're on the Economic Times this morning. Over to you, Varun, for the rest 5.
Cheryl, good morning. So let's begin with the first story I have here for us today. Is Nippon Life eyeing a stake in IndusInd Bank. So we all know the problems IndusInd Bank has been facing. It seems that talks have begun between the Hinduja family and Nippon Life for a stake in the bank, which might give them a much needed breather from everything that's happened in the markets in the recent year. So moving forward, MeitY notifies Arogya Setu app of data access rules. So there's a lot of speculation going on about the safety and privacy of all this information, and obviously it's very sensitive. So it seems that there's being some set guidelines being in place for that as well. The next one for me today is that the PSRDA is set to relax NCD payment norms. So we'll bring you more on that once we actually understand what the changes have been. IT seeks changes in labor laws, so that kind of self-explanatory. And finally, global pension funds pause India investment. So this is pretty key. We know FIIs have been sellers, they've been leaving. Pension funds are large contributors to Indian equity markets. They really contribute a lot. So them pausing their investment on India could definitely have an adverse impact on us. Back to you, Cheryl.
All right, those are the top stories that are there on the Economic Times. And let me shift focus to the ET Markets page, and let me get you the top headlines that's there on the ET Markets page this morning. And first up is Reliance Industries has rallied over 3% as record date for the rights issue nears. That's the top story on the ET Markets page. Moving on, Tata Consumer, Biocon, IGL may join MSCI India Index in the latest rejig. That's what is as per a brokerage note from ICICI Direct. Then Jhunjhunwala hikes a stake in VIP. The shares have rallied. Post that, you have auto stocks that has risen as sales in many regions fuel hope, and sovereign gold bonds are likely to shine. So those are the top headlines that's there on the Economic Times Markets page.
Right. Let's also get you up to speed what's happening with the corporates. So the first one is that Tata Steel may demerge its UK and Dutch units. So, in a time like this where obviously all industries are really taking a back foot because of COVID, it seems that there's some corporate restructuring that needs to be done within the Tata Group, specifically with their overseas subsidiaries. Moving forward, Indigo denies Virgin Australian bid plan. So maybe in the current environment, they're scaling back any kind of inorganic activity plans. Moving forward, electric gear makers seek ban on Chinese firms. So obviously now production is picking up in India. We've heard about Apple considering India as a huge production destination. So even auto manufacturers, the same way, they want some kind of protection from Chinese manufacturers. And moving forward, auto dealers plan to launch online sales platforms. So a Car Wale, a Car Dekho, we already have some of these. It seems that there's a few more on the anvil in recent times, specifically for dealing. And finally, Piramal Enterprises plunges into the red on the COVID provisioning. So we all saw yesterday a massive provision for Piramal Enterprises, I believe to the tune of 1,900 crores in their financial services segment. Similar to what a lot of banks are doing. So definitely Piramal definitely envisioning some pain coming in the near future. Back to you, Cheryl.
All right, those are the top headlines, the corporate headlines coming in from the Economic Times. But let me take you through the lead story that's there in the Economic Times as well as the Times of India, and that is the Prime Minister and State Chief Minister's fifth video conference meeting that was held yesterday. It went on till late evening, and here is the headline. The Prime Minister Narendra Modi bats for unlocking of the economy. The chief ministers are divided. The Prime Minister moves for gradual easing, says that the train services to rev up economy. Maharashtra, Punjab, Bengal want the curbs to stay on. Prime Minister has asked the chief ministers to submit their blueprints by May 15. Let me take you through more details on that particular story. Prime Minister on Monday impressed upon chief ministers the need to resume economic activities. He's also asked them to submit their individual blueprints by May 15th on how they plan to deal with the gradual easing of the lockdown in their states. Let's talk about which are the states that are for the unlocking of the economy or for partial resumption in the services. If you see the states that are batting for full lockdown extension, that's Maharashtra, Punjab, Telangana, West Bengal, Bihar, as well as Tamil Nadu. They've cited rising number of cases to seek the extension in the lockdown right up till May 31st. Meanwhile, Telangana, Tamil Nadu and Karnataka do not want train or air services also to resume till May 31st. So these are the set of states that are for full lockdown extension. Which are the states that are for lockdown with relaxations? That is Delhi, Odisha, Gujarat, Karnataka. They're seeking more relaxations. They want economic activity to be started in the red zone districts. They're saying only containment areas should remain shut. So this is what the states are asking for, but what centre wants? They're saying resumption of more activities barring in the containment zone. So by May 15, the chief ministers are supposed to submit their blueprint to Prime Minister Narendra Modi on how they plan to go ahead to unlock the economy. They're supposed to give their plans on how to deal with the gradual easing of lockdown, and that indeed is the top story on the Economic Times as well as Times of India this morning, Varun.
Right, Cheryl, thanks for bringing us that. You know, also another pretty key story is that once the railway offices opened for ticket booking, you saw 10 crore tickets sold to 54,000 passengers in one day. Just goes to show the pent-up demand and talk that's really there for the trains to begin again. Utkarsh is joining in with the latest developments. Good morning, Utkarsh. Take it away.
Exactly. So as you said, tickets worth 10 crore rupees being sold in the period of not only 24 hours, but it was supposed to open at 4. The server crashed at, again, it opened around 6. It's a matter of few hours that all of these tickets were sold. And if you're a frequent traveler by the Indian Railways, you realize that on a normal day itself, ticket booking is one of the most biggest challenges for a common commuter. These are special cases. Only there are 15 trains which have started. Most of the trains are starting from Delhi and going to a location. But clearly, the response we've been anticipating. We know that most of these people have been workers, have been people who are stranded in other cities trying to move out. Obviously, you can't. There's one way now. There's a route. You can travel by route, but that's very expensive in nature, and that is precisely the reason why you have seen this response. Now, the Railway Ministry obviously has said that they will go ahead and start more trains and at more locations at this point of time. There are only 15 at this point of time, but clearly the initial 3 to 4, 5, 6 hours where the booking started got a humongous response, and in fact the server crashed many times. And booking a ticket at this point of time wasn't very easy.
All right, thank you, Utkarsh, for getting us through that particular story, taking us through the entire details of it. Railway tickets worth 10 crore rupees was sold to 54,000 rail passengers. Berth on some routes like Howrah, New Delhi filled up within minutes. Remember, this today will mark the phased restart of interstate public transport after 7 weeks of lockdown. So very important development coming in on that front. But let me take you through another story that's there on the Economic Times front page, and that is Nippon Life eyes IndusInd Bank stake. The lender seeks funds as profits come down and sector is under pressure. Let me take you through what's written in the story. It's an Economic Times exclusive story. Nippon Life has begun discussions with Hinduja family-backed IndusInd Bank to explore a strategic investment in the private lender, which is battling bad loans and potential ratings downgrade. That is as per the sources that have told Economic Times. Buying into a bank will help Nippon get much needed bancassurance partnership for distribution of its insurance products and secure big corporate treasury money for its asset management business in India. Nippon Life is actually the largest life insurer in Japan by revenues. They entered India as a JV partner of Reliance Life, hiked stake to 49% in 2015. They bought 75% stake in Reliance AMC in 2019. They don't have a significant banking partner for the insurance business. So this deal will also help cross-sell MF's access large corporate treasuries. And this is why this deal is important for Nippon Life. The talks are still at preliminary stages. Like I said, MF cross-selling, bancassurance ties are likely the benefits of deal. So this is an Economic Times exclusive that you're seeing this morning, that Nippon Life is eyeing IndusInd Bank a stake. So a big story over there brewing, looks like it, Varun.
Yeah, Cheryl, it'll be interesting to see how it closes. Let's remember, in IndusInd Bank, even the Hindujas are yet to infuse quite a large sum of money. We're waiting to hear what happens on that. But switching gears a little bit, let's talk about the bond market and funding costs. Funding costs climb after the government revised its borrowing plan. The market's concerned about the excessive bond supply, and investors are awaiting RBI intervention. So for the sovereign and corporates, after the government has announced a 50% increase in its borrowing plan, raising concerns about the excessive bond supply in the current market. You saw the benchmark gauge actually rallying as much as 20 basis points yesterday, as investors actually turned jittery over the central government said that they plan to borrow more money than was initially stated. So this is something that should keep that space quite active. On the one hand, you keep talking about stimulus and everything the country needs. On the other hand, you have to look at where is the government going to go to get this money. So two important angles to consider there. Back to you, Cheryl.
Let's now flip pages to page 4 of the Economic Times, and you have a story here right at the top over there that's saying that global pension funds pause their India investment. They plan to return in the long term but focus on base countries as of now. So here is the top story on page 4 on the Economic Times, that global pension funds are pausing their India investment. They're gauging the demand by COVID-19 to the economy. They're waiting for current global portfolios to stabilize. Market is volatile and there is extreme uncertainty. So that is one of the reasons why the global pension funds may have paused their India investment. But to talk more on this, what this means I'm joined by my colleague Jayesh. Good morning, Jayesh. Take us through this important story that's there on the Economic Times.
Good morning. So what it actually mentions is that some of the global pension funds have actually put their India investments on hold. As per the article, there are at least 3 of these pension funds from Canada and Australia that have been named that had in fact slated about billions of dollars to come into India, but due to the ongoing damage because of the COVID-19 situation and the economic stall, they have reconsidered and put their plans on hold. The pension fund commitments were actually in the investments in the liquid assets, which was either direct or through a fund. Those two have been put on hold. However, the positive being that most of them are saying that they have continue to have long-term plans for India and are positive on the Indian economy as well, because they believe that India is an attractive investment destination, and also they are monitoring how the short-term market volatility actually plays out. But for the long term, that is where the bulk or future global growth will come from. Other than North America, India is the place that they are actually watching out for. So broadly, what they have done is whatever investments they had to do in India, that has been deferred or put on hold for some time now.
All right, thanks for that, Jayesh. Quite concerning for our equity markets here. Switching gears a little bit to the banking sphere. This article is actually in the Times of India. Lenders led by the State Bank of India are pushing for the creation of an ARC. So we all know that there's going to be a bunch of bad loans coming in. That seems to be the fear among all the banks. So what SBI is saying is, why don't you create an ARC, which is an asset reconstruction company, which whose sole purpose will be to manage all the loans that have already been provided for by these larger banks, and essentially can deal with the restructuring process on behalf of the bank so that it doesn't take up their bandwidth. It's quite an interesting idea. It'll be interesting to see how it's followed through, and whether it'll be a vehicle just for SBI's bad loans, or it'll be a vehicle for the PSU bad loans, or a vehicle for all the bad loans that come out during COVID. There's no details on that. We're still waiting to hear something more there. Yeah.
All right, let's move on to some corporate development then. And here you go, page 4 of Economic Times. And you have Indigo that's denying Virgin Australia bid plan. So what is the story all about? Where did Virgin Australia come into the picture? Well, let me read the story from the paper itself for you. Indigo has denied that it was seeking to acquire Virgin Australia. The Australian Financial Review on Monday had reported that it was putting together a proposal to bid for the bankrupt carrier. Indigo hasn't formulated any such proposal. Neither does it have any interest in this matter. That's the clarification that came from Indigo late evening yesterday. India's biggest airline is in the Virgin Australia's data room and seeking to put together an indicative proposal for administrator Deloitte. That is what the Australian Financial Review said yesterday, attributing this particular development to sources. But like I just mentioned a while back, that Indigo has come out and definitely denied this particular report, saying that they have not even formulated any such proposal, and neither does it have any interest in this matter. So there you go. Any such news, Indigo is outrightly denying that they're looking to buy or looking to formulate a plan in any way to buy out Virgin Australia or look to buy a stake in that particular airline. So COVID-19 definitely having its impact on aviation space worldwide, Varun. So you can see that impact as well here.
Right, Cheryl. Can you just imagine? People aren't flying. We're talking about airlines going bankrupt. I think it's quite unfathomable that someone will go out right now and buy another airline. It's taking a lot of risk, especially with a company like Indigo, where you do have a very large fleet already, a lot of new planes being delivered, and capacity really isn't the issue. Switching gears a little bit, MITI, or the Ministry of Electronics, has notified a set of data access and knowledge sharing protocols for the government's contact tracing app Arogya Setu. So obviously this step has come in the view of concerns raised around the privacy. All this information is really integral to each individual and it should be handled very delicately, and it seems that the Ministry of Electronics is taking a lot more serious initiative towards safeguarding this information.
All right, those are the top stories that's there on the Economic Times. Now, let me shift focus to the top coronavirus stories that's there on the Times of India. And 4.2 million have been infected globally, with around 2,85,000 left dead. So definitely creating havoc globally, COVID-19, that is for you. Meanwhile, India is inching closer to the 70,000 mark. India went from 60,000 positive cases to almost 70,000 positive cases in just 2 days. So there you go, a matter of concern coming in for India as well. Talking about the state, about Maharashtra, they see over 1,000 cases for a 6th day in a row. The count has crossed 23,000 as of now. Over 1,000 cops are infected in the state. So that's another concern, where you have the cops also getting infected due to coronavirus. Next up, you have center that started a sero survey to monitor the spread. So that's another story that's coming in on the coronavirus this morning. On what the center is planning to do is set sero survey to monitor the spread of coronavirus. So those are the top stories coming in on coronavirus from the Times of India for you this morning.
With that, we're completely